This is why the market has already crashed. Ray Dalio just predicted the collapse of America and detailed exactly how the economic system is faltering. History always repeats itself, and while humans always innovate, emotions never change. Hello and welcome to Money Invest. In this video, we'll be talking about why the stock market is already crashed. Make sure to watch the video until the end to know why we think so. Join our channel by hitting subscribe and clicking the bell icon to be updated on new uploads. Without further ado, we'll introduce you to a highly influential businessman. Ray Dalio is a bit of a polarizing figure in the investment world. He's a multi-billionaire founder and co-chief investment officer of Bridgewater Associates, the largest hedge fund in the world. With over $140 billion in assets under management, he's polarizing for several reasons, from the way he runs his company to his views on the world of global finance. He might have correctly called the 2008 financial crisis, but he's made a lot of predictions that never panned out too. Even so, he's made a name for himself as a global big-picture investor and has studied markets not just for the past 20 years, but going back hundreds of years. This has given him insight into what our current economy looks like compared to generations past and what might become. In this video, we'll give you the latest about what this history buff/investor has to say about what the world looks like now. There are three main indicators that Dalio is closely watching. First of all, the wealth and opportunity gap is creating significant division within the United States. While household wealth is broadly increasing in the US, the upper class has grown their wealth disproportionately compared to the lower classes. The household wealth of the bottom 50% of the United States is lagging by a considerable amount. The wealth gap is becoming so significant that a top 10% of the US now owns 70% of the entire US wealth. A thriving economy is typically great, but the wealth gap is indicating a growing tension between the economic classes. We can see this with how polarizing politics has become. Whether you like it or not, the political spectrum is becoming increasingly radical. US economy, and one of Dalio's biggest concerns close to home is the wealth gap. We can hear you chuckling, and it makes sense that you left a man worth $17 billion saying in 60 minutes that income inequality should be declared a national emergency. In his studies of historical economics, he says that when you have such an enormous wealth gap and combine it with an economic downturn, there will be conflict. This is creating internal disorder, a key factor to the downfall of economic powerhouses. The next major concern is the US government's growing debt balance, which has been exacerbated by the pandemic. The total US debt has increased from roughly $15 trillion in 2012 to $29 trillion today. Despite this massive debt problem, the government is continuing to spend enormous sums of money. The most obvious historical reference to something like this is the French Revolution in the late 18th century, when the aristocracy and the monarchy were forcibly removed from power. Income inequality has been a problem for quite some time, but the pandemic in 2020 made it obvious that something needs to be done soon. One of the tactics that Dalio has said would help is to simply use the tax system more effectively. While he does say taxing the rich isn't necessarily the answer, he also says that the only real answer to helping the income gap is through more productive uses of tax dollars. This could be more taxes in one way or another, but he says taxing pollution and other negative impacts and products that do the same within society would perhaps allow for more effective taxing. Not only that, but Dalio also says using that tax money more productively is critical if we're going to see the income gap narrowed. China's economy. China has been creating some waves for investors over the last several months. Some estimates say that through recent regulations, they have wiped out over $1 trillion of wealth from Chinese stocks. Many investors are selling out their positions in Chinese markets in anticipation of more turmoil shortly. Ray Dalio, on the other hand, seems to feel that those who are selling out the Chinese positions are doing so out of fear rather than out of strategic thinking. It's the same as an investor. It's not smart to sell on the break or buy. It's a strategic play. Contrary to some investors' opinions, Dalio has specifically mentioned that the common prosperity that some investors say should be a red flag is, in fact, a step in the right direction. Contrary to some investors' opinions, of course, it reinforces his opinions. We just talked about wealth inequality in the US. In Dalio's mind, the goal of common prosperity might seem harsh and worrisome to investors now, but it has the potential to set the stage for a Chinese economy to dwarf all others once they enter another growth phase. After the short-term goal of common prosperity has been reached, I want to bring in now for the scary part. One of Dalio's worst case scenarios is that the US and the Chinese might be on a conflict brink. And that too, it could be an open conflict. The trade war that started during the Trump administration in 2018 was essentially one of the first and most obvious moves in this global chess match with China. But a chess match is exactly what we've been watching play out over the last several years. The concern from that perspective is that what's happening later in the game. When the metaphorical king gets backed into the corner, he won't get too far into it. But suffice to say, China thinks Taiwan belongs to them, and Taiwan thinks it's a sovereign nation. As this issue is up in the air, the US has been selling arms to Taiwan for decades to build support against China. The island of Taiwan is only 100 miles from mainland China. We value your enthusiasm, so don't forget to subscribe to the Money Invest YouTube channel and ring the bell to be informed of new episodes, and keep watching. So you can see how this situation is basically a tanker full of gasoline and it only needs a spark. Before you click away to grab a trash bin, take a few deep breaths and remember, this is Dalio's worst case scenario. The world is far better than it has been 100 years ago. Sure, there are still conflicts every single day that make some of the past wars look like melodramatic rugby matches. However, the global superpowers still understand for the most part that peace is generally better for business than global war. A lot of things would need to happen for active war to become an option. That being said, financial catastrophes are not uncommon. Putting sandbags outside your house might be overdoing it, but you can put up some defenses around your portfolio. And Dalio has some tips for you there. Dalio tip number 1, cash is not king. Dalio avidly recommends against anyone holding onto cash or cash equivalents. The math here is easy, and it's because of the rising inflation we are experiencing. Cash doesn't earn any interest by design. It's meant to be fungible and very liquid, but that means you take no risk and can gain no returns. With inflation sitting above 6%, any cash you hold on it is to be essentially losing 6% per year. Dalio tip number 2, risk management. One of the first things Dalio recommends you to do is to understand how to manage the risk that's in front of you. You should think critically about what the worst case scenarios are and then figure out ways that you can minimize or even eliminate those scenarios from harming your portfolio. Diversification is one of the first steps in this, but there are other ways to give your portfolio a bit more protection. Dalio tip number 3, diversification is your friend. Many of the smartest investors, including Warren Buffett, will tell you that diversification is not the best way to see good returns on your investment. Mark Cuban, infamous billionaire investor from Texas, would tell you diversification is for idiots. Dalio, on the other hand, has continuously said that when uncertainty is on the rise, the best defense against losses is by diversification. His flagship fund, Pure Alpha, is an actively managed fund on diversification assets. It has only lost a handful of years over its entire life. No one can know all things all the time about the market, so make sure you take this advice to heart and gather information from several sources before making decisions that you should. And Dalio's words, triangulate by taking the 3 smartest people or sources you know and comparing them to what you've learned from them. And now we've reached the end of the video, but wait, make sure to leave a like and subscribe so you can join the Money Invest squad and be a part of the channel. Thanks for watching the video.